Okay. So we already completed Ind AS 16, property, plant and equipment. So let's start our discussion with Ind AS 38, intangible assets. Ind AS 38 deals with the intangible assets. Okay. So the tangible items which are classified under PPE is dealt by Ind AS 16. So most of the tangible items are covered under Ind AS 16. So for the intangible asset, there is a standard called Ind AS 38. So let's see the examples for the intangible assets that are within the scope of other standards. All the intangible assets are not dealt by Ind AS 38. Okay. So let's discuss about the scope first. Which type of intangible assets are excluded from the scope of Ind AS 38? So Ind AS, okay. Intangible assets held for sale in the ordinary course of business. For example, software company is there. Okay. The softwares, what is its ordinary nature of activity? Selling of the softwares. Software is a intangible assets. So in that case, whatever the softwares are classified under Ind AS 2. Okay. Whether it is a tangible item or intangible items, if you are selling in the ordinary course of business, then it becomes your inventory. So even though that is intangible inventory, it should be classified under Ind AS 2. Okay. It will not be dealt by Ind AS 38. Deferred tax asset. We will get the word deferred tax asset in Ind AS 12. So the difference between the accounting profits and the taxable profits, on it we need to apply the tax rate, then you will get the deferred tax assets or deferred tax liabilities, which are also intangible assets. But those type of intangible assets are dealt by Ind AS 12. Then leasing of intangible assets. So if it is a leases, all the type of leases, whether it is a tangible or intangible, is covered by Ind AS 116. Then assets arising from employee benefits. Assets arising from employee benefits, Ind AS 19. It will not there in our syllabus, but assets arising from employee benefits means what we are going to do? We will deduct PF, okay, gratuity, all these, right? So all these, what we are going to do? We need to invest it somewhere. Okay, we need to invest it somewhere. So from that, the assets are arising from the employee benefits. So there is some calculations regarding with the assets arising from the employee benefits. There are actuarial assets. Okay. Then financial assets. The assets which are classified under the intangible assets, which are classified under financial assets, are dealt by the Ind AS 32, and goodwill arising in business combination. Goodwill is also a type of intangible asset, but goodwill arising in business combination is dealt by Ind AS 103. Then what about internally generated goodwill? Generally, internally generated goodwill should not be recognized in books. So it is not allowed to recognize in books. Only externally acquired goodwill only should record it in the books, but not as per Ind AS 38, as per Ind AS 103. Then non-current intangible assets classified as held for sale. What is the standard name of Ind AS 105? Non-current assets held for sale. So non-current tangible assets, maybe it may become tangible assets or intangible assets. So non-current intangible assets directly dealt by Ind AS 105. Then assets arising from contracts with customers, Ind AS 115. Okay. Then financial assets defined in Ind AS 32, financial instrument presentation and recognition, measurement of exploration and evaluation of assets, and expenditure of development and extraction of mineral, oil, natural gas, and similar non-regenerative resources. For example, okay, this question is going, it's not going to be asked in any exam, if at all. In any, in our exam, if any question is there on non-applicability of the respective Ind AS, so whatever the non-applicability, so you can write these two words: recognition, measurement of exploration and evaluation of assets, and expenditure of development and extraction of mineral oils, natural gas and non-regenerative resources. These are the two common non-applicabilities for all Ind AS. You can take this help. Okay. If there is asking any non-applicability of the Ind AS, so try to write these two common points first. Later than that, if you have remember any points regarding with that non-applicability, you can write it. Otherwise, at least you can attend for 2 points, right? Okay. So the non-applicability is complete. So intangible, Ind AS 38, intangible assets. So the following are the intangible assets, but which are not dealt by the Ind AS 38. Okay. Let us see the definition of intangible assets. What is the definition of the PPE? PPE are the tangible items that are used in the production or supply of goods and services, or for administrative purpose, or for indulgence to others, except land and building. This is the purpose, and okay, and expected to be used for more than one accounting period. That is the definition given under Ind AS 16 with regard to PPE, property, plant and equipment. So here also one definition is given to intangible assets as per Ind AS 38. This is the intangible assets definition, not in general sense, it's a special sense as referred by the Ind AS 38. So intangible asset is a identifiable non-monetary assets and without physical substance. Okay. An intangible asset is a identifiable non-monetary asset without physical substance. Identifiable means it can be separable or separate from the contract and capable of separated from entity, or it can be sale or transferred individually. Then only we can recognize that asset in our books of accounts. Okay. So no physical substance, because it is not a tangible item, so we cannot see and touch. Then what is the other asset, other element? Non-monetary. What is meant by non-monetary asset? In Ind AS 21, they are giving the definition what is monetary assets, what is non-monetary assets. Okay. Non-monetary assets means it does not involve fixed or determinable amounts of money. Okay. So generally there is no specific definition for monetary, non-monetary. Non-monetary assets means other than the monetary. What is monetary assets? Monetary assets means the receipt of the cash payment is in fixed form. For example, I can write debtors. Debtors is the monetary item. So I know that how much I am going to receive from him. That's a fixed, right? How much? 1 lakh rupees. Okay. So this fixed amount is going to be received after 6 months. Then there is a, let's say, property, plant and equipment. So I am writing it down, PPE. So I can write it as 70 lakhs. I can write it as 70 lakhs. Does it mean I am going to receive exactly 70 lakhs? No, I don't know. This is not a fixed determinable amounts of money. Okay. But the assets which are measured in fixed determinable amounts of money, that assets is known as monetary assets. Okay. Then let's say inventory is there. Inventory is a monetary or non-monetary? Inventory is a monetary or non-monetary? Monetary means I am going to receive this much amount for these type of assets. Whether is there any guarantee to get 5 lakh rupees? You need to make sale, right? There are several aspects, and that too you may give some discount or something at the time of the sale. Okay. Talking inventory means it's a closing stock. Closing stock means next year opening stock. If it is become sale only, then you are going to get the amount. How you don't know how much amount you are going to get, because these 5 lakhs are at cost or NR, whichever is lower, right? But by selling of these 5 lakh rupees, you may get more also. It's not fixed, right? You don't know how much amount you are going to get from these 5 lakh rupees. So it's also non-monetary. That is the main difference. So here intangible assets also non-monetary. We cannot say that how much amount of the cash we are going to get from this intangible assets. Second, the identifiable. Identifiable means I bought one business. I bought a business. So along with that business, its brand name is also going to be transferred to me, right? Okay. Can I sell this brand name alone without selling the business or without transferring any assets? Can I sell this brand name alone? Generally I cannot sell. By the transferring of the entire business, it is going to be automatically transferred. Okay. In that case of brand name is not identifiable. So because it is not capable of separated from the entity, or we cannot sell it separately. In that case, we cannot say that it is intangible assets. It is not identifiable. Then we can say that it is not intangible assets. So intangible assets, there should be 3 characteristics. It should be identifiable, it should be non-monetary, and it does not have any physical substance. That's all. And let's see the example. That's enough. Market share. Following are not considered intangible assets, and they are giving the reasons why they are not called it as a intangible assets. What are the missing characteristics of the intangible assets as per Ind AS 38? So market share is not identifiable because we cannot sell it separately, right? We cannot sell it separately, or we cannot capable of separating it from the entity. So one business is there. I went to him, I don't want to purchase your business, but can you sell your customers? Can I ask him? I am asking him to give your all customers to me. I will pay you the amount, okay, without transferring the business. Is it possible? No. The customer itself is a business, right? In the same way, market share means same thing. So the Colgate toothpaste is there. It has a market share of 40%. Like if 100 customers are there, out of 100, 40% are using Colgate paste. So it has a market share of 40%. Can I recognize that 40% market share in my books of accounts? We cannot recognize because we cannot sell this market share to the outsiders. We cannot sell these customers to the outsiders without transferring the business. Okay. So it missing the element of non-identifiable. Next, marketing and advertisement campaign. Future economic benefits. Okay. Future economic benefits is uncertain. So what is they saying? So if you going for the asset definition, they are giving only intangible asset definition. What is the asset definition? What is the asset definition? Okay, asset is a type of resources, okay, from which certain future economic benefits will flow to the entity. And second one, cost should be measured reliably. So what are the two aspects? Future economic benefits and cost. Cost should be measured reliably. Third element, here future economic benefits is there, right? So these future economic benefits should be used only by the owners. Okay. Future economic benefits are flowing from the entity. Okay, that is also received by the entity. But can I say that without controlling or without restricting other persons to use that benefits, can I say that that is my asset? Here some example is there. There is a mango, 1 minute. There is a mango tree beside the road. Okay. Can I recognize that tree as an asset in my books? First thing, future economic benefits. I am talking about the future economic benefits. Every day I am going to mango tree, I am getting the mangoes. Okay, I am selling it in the market. So I am getting the future economic benefits and which are certain also. I can say that every day I am getting 10 or 20 mangoes, I am getting. But can I restrict others to without getting those mangoes? No, because I don't have control. To recognize or to record any asset in my books of accounts, I should have control over that asset. It control means only I should have the enjoy the future economic benefits from the asset. Second thing, I should have the I should have the right to restrict other persons to getting the benefits from this asset. Then only you should recognize in your books of accounts. Here future economic benefits, the two certain future economic benefits should be there to recognize any asset. Here we recognize, we incurring marketing and advertisement campaign. What is the element is missing here? Future economic benefits are uncertain. I made an expenditure. Is it means I am getting the clients? I don't know. It's an marketing expenditure. Sometimes it will work out, sometimes it won't work. So there is a uncertainty with respect to future economic benefits. So that's why it will not be covered under intangible assets. Second element, staff training program. Staff training expenses. So we have recruited staff and we have incurred expenses. Can I record those expenses as an asset? Can I record those expenses as an asset? Here what we don't have? We don't have control over staff. They can resign at any time. Of course, you have invested on the employees. You can get better revenues from them. But the point is here, we don't have control over the staff. If he resign in between, we lost all the expenditure, right? In that case, unnecessary the expenditures are we shown it as an asset. Second thing, cash paid to obtain skilled staff. Cash paid to obtain skilled staff. If you want workers and not and all, there are brokers generally. We will pay the money, they will arrange the persons. And that too. In LinkedIn also, if you want any professionals or something, they will refer us. If you get a premium, we can get the better persons. So here we are paying amount to the LinkedIn for getting the persons, right? So the amount paid to for obtain the skilled staff. Is that amount should be recorded as an asset? In that case also we don't have control over the staff. They can resign at any time. But if you have a contract, so we recruited one employee, we incurred the expenses on him, training expenses, and we have incurred the recruitment expenses also. But the contract is, if you resign in between, you should pay all these expenses to us. So this is the company policy. In that case, we can record these expenses as an asset. One thing, if he is resigning in between, I will get it as a compensation from the employee. Second thing, he is not resigning in between, at least I can get these expenses in the form of revenue. In that case, I can recognize that as an asset. Here, recognition of intangible assets. Intangible assets is recognized in the financial statements if it is satisfied the definition of intangible assets, then probable future economic benefits will flow to the entity and cost can be measured reliably. Okay. So these conditions are cumulative satisfaction or condition. I am asking whether can I satisfy at least one condition or I may need to satisfy both the conditions? Both. So we should satisfy both the conditions cumulatively, then only we should recognize intangible assets in our books of accounts. Then future economic benefits from the intangible assets may be in the form of revenue for sale of products or services, cost savings, other savings from the assets. Okay. Revenue from sale of products or services. Second thing is cost savings. I purchased one asset, I purchased one software. Because of this, there is no need of manual work. So I can save the 2% salaries. So that is also economic benefits, right? I am not generating other income, but because of this software, what I am going to do? Cost reduction. Then other savings from the use of asset. Okay. Usually I am going to spend 12 hours on my work. Because of getting the new software, it saves me a 4 hours time. What I am going to do? This 4 hours time I can invest on my other activities of the business. So what is here what is the saving I am getting? I am getting time savings from the use of asset. Okay. So the economic benefits may be in the form of revenue, cost savings, other savings from the use of the asset. All these are the just theory part to make you understand what is the type of intangible assets, what is the recognition criteria. And these are generally useful for only for MCQs. Second aspect, modes of obtaining intangible assets. Modes of obtaining intangible assets. We can obtain separate or acquisition or purchase. We can obtain from outside. We can purchase the intangible assets. Second thing. Or we can internally generate the intangible assets. Third thing, business combination. Post of the business combination means goodwill. Because of business combination, I am going to get the goodwill. Of course, goodwill treatment is as per Ind AS 103 only. Second aspect, in the same way, Ind AS 16, PBE should be recognized at initially at cost. So, intangible assets is also should be recognized at cost. What is meant by cost? Tell me from the knowledge of the Ind AS 16. What is meant by cost? There are three aspects: purchase price, directly attributable cost, present value of dismantling cost. Same, apply the same formula here also. You no need to read it again. Then internally generated goodwill. So this area is useful for the practical aspects. Practical aspect. So I wanted to generate the intangible assets within the office. So okay, I started one R&D department. I recruited some persons, so they keep on working on it to get the better formula for the medicine. So I am I am in the business of the pharmaceutical business. So we are trying to develop one formula. Like on that we can take the patent, right? So I am generating one intangible assets. So I can purchase this formula from the other pharmaceutical companies. Then we can say that the mode of acquisition of intangible asset is from outside. From outside, how should at what amount I should recognize this intangible assets in my books of accounts? Then we can follow the cost model. Cost. You know the cost: purchase price, directly attributable cost, and present value of dismantling. Of course, this is an intangible asset, right? There should not be the element of present value of the dismantling cost. Maybe they have the present value of the future cash. Maybe something might be there related to that, but there should not be a dismantling cost. Okay, because this is an intangible asset, right? Second thing, what is the second one? Internally generated assets. At what amount this should be recognized in my books? In the first case, I can easily say that, so these are the cash outflows going out of because of this acquisition. So these cash outflows should be recognized at a cost in my books of account. Then with the internally generated intangible assets also, our focus is on how much cash outflows are going out of this internally generated assets. At that amount I should recognize. But the entire process is divided into two parts: research phase and development phase. So I started one research. On that initially I have incurred 20 lakhs. So what I am saying, so here can I recognize this 20 lakhs as intangible asset? So I don't know anything. So these 20 lakhs are I am incurring for one formula, right? So that's why I have recognized it as an asset in my books of accounts. Later on that, after some part of the time, what happened? This research is no use, because already the product is came into market, depends on this technology. So even though I have incurred the expenditure on this research, there is no use. That's why I stopped this research here itself. But in my balance sheet, still it is showing at 20 lakhs is the asset. Is it really asset? No, right? It will not generate any income in the future. At that case, what I am going to do? I should de-recognize the asset in my books. So until you will get the certainty regarding with the outcome of the future economic benefits, you should not recognize those expenses as an asset. Okay. For this, for the entire research process should be divided into two parts: research phase and development phase. If any expenses incurred during the research phase should be transferred to P&L. The expenses incurred in the development phase should be recognized in asset, should be recognized as an intangible asset. Now what is the research phase and what is the development phase? They use the word development phase starts after the establishment of technical feasibilities and regulatory approval. This is the word. Establishment of technical feasibility. If there is a establishment of technical feasibility, then I can say that the development phase has been started. The expenditure incurred before the development phase should be transferred to P&L. The expenditure incurred after the development phase should be recognized as an intangible asset. If the entity cannot distinguish between research phase and development phase, I am unable to distinguish between this is the research phase and this is the development phase, then the entity treats expenditure is incurred in research phase. If you are unable to decide what is the research phase and what is the development phase, we can assume that so the entire expenditure incurred in the research phase, because there is uncertainty, right. If you are able to differentiate the phases only, then you can say that. If you are unable to differentiate, assume it. So, the all expenditure is incurred in research phase only. So, it will be useful for MCQ. Next one. If the research project is acquired in a business combination and it is recognized as intangible asset at fair value. Now, what I am saying here, generally if it is a internally generated intangible asset and you are in a research phase, in research phase you have incurred the 20 lakh rupees, you have incurred 20 lakh rupees, then what we are going to do, this 20 lakh should be transferred to P&L, right. So, A Limited incurred 20 lakh rupees in research phase. So, it is a research phase, I transfer 20 lakhs rupees to the P&L. Now, Purna Limited acquired Arun Limited. In that case, even though the expenditure is incurred in research phase, this expenditure should be recognized as an asset in Purna Limited books. In Purna Limited books, this 20 lakh rupees should be recognized as an intangible asset, even though the expenditure is incurred in research phase, and record as intangible asset. That too, they cannot record it as 20 lakhs, they should record it at fair value. The fair value of this 20 lakhs should be 25 lakhs. So, Purna Limited should record this research phase expenses in its books of accounts as a part of business combination as an intangible asset. Okay. But in my books, I am not supposed to recognize it as an intangible asset. But as a part of business combination, even though it is a research phase, can recognize it an intangible asset at fair value, not at cost. Okay. Then internally generated goodwill, brands, publicity titles, customer list are not recognized as intangible asset or expected to transfer to P&L, as cost cannot be measured reliably. Cost cannot be measured reliably. How much you have spent for getting this brand image? Are you spending separately for getting brand image? No. By the passage of the time, okay, by the taking of all the factors into consideration, your brand is building up. Okay, we cannot say that this much of expenditure I have incurred for the brand building. Okay. Then subsequent recognition of intangible assets. Subsequent recognition means, what does it mean? Every balance sheet date, I need to look at my all assets and liabilities, right? At that time, am I need to make any changes? Yes, we need to make some changes as per the respective Ind AS. So, as per the Ind AS 16, at every reporting date, with the valuation of the assets, I can follow two models: cost model, revaluation model. So, in the same way, for the intangible assets also, there are two models: cost model and revaluation model. Okay. There is an intangible asset. What is meant by impairment? Impairment means there is a reduction in the carrying amount of the asset. That should be need to reflected in the financial statements. Generally, impairment should be provided on all the assets. Okay. Of course, there are some exclusions, But what is the general rule? As per Ind AS 36, impairment should be provided on all the assets. Okay. All the assets means tangible assets, tangible assets and intangible assets, right? So, generally we should provide the impairment on intangible assets also. Okay. And what is the next element? Depreciation. We should provide the depreciation as per the Ind AS 16. Okay. But generally, of course, in the natural basic principles of the accountings also, we should provide the depreciation as per the matching concept. Okay. But intangible assets also, am I need to provide the depreciation? With respect to intangible assets also, I should provide the depreciation, but the name is different. They use the word amortization. So, please tell me the formula for depreciation. Under SLM method, carrying amount minus okay. I am going to give you an exact formula. Opening carrying amount after revaluation minus expected residual value divided by expected remaining useful life. That is the formula. Here they use the word useful life. So, our most of the tangible assets have useful lives. Okay, we can say that this is the useful life of the asset. So, only for those years I can get the economic benefits from that assets. After that, there is no economic benefits. After that, we are going to derecognize the asset. So, I cannot derecognize the asset at the end of the year, right? So, we are derecognizing asset from your books of accounts over the period of time. Okay. So, in the same way, intangible assets is also should be derecognized from the books of accounts over a period of time in the form of amortization. But am I providing depreciation on the land? Am I providing depreciation on the land? No. See, it doesn't have useful life. It has infinite useful life. There is no depreciation on the land, right? So, in the same way, there are some intangible assets which have infinite useful life. If it has an infinite useful life, we cannot provide amortization. But we can test it for impairment annually. Okay, we can test it for impairment. Impairment means I need to compare the book value with the market value of the asset. Okay, and I should recognize the asset at market value. So, that is the object for the impairment. Amortization is not applicable for infinite useful life of the intangible assets which has infinite useful life, but we should test it for impairment annually. Then wherever there is a indications of the impairment also. This is an MCQ. So, how the MCQ is going to be formed means, am I need to provide impairment on all the asset every year? Am I need to do the impairment test every year for all the assets? No, there is no need of do the impairment test on the all the assets every year. Okay. Then when should we make the impairment? Only if there are indicators. If there is an indicators, so you should do the impairment, then only I made the impairment for the all assets. But there are few exceptions to this rule. I should do the impairment annually. So, I should do the impairment test annually for the assets which have indefinite useful life. Because we are not providing depreciation, right, or amortization, right. So, that is why the intangible assets which have indefinite useful life should be made impairment test annually. Okay. Then, if it is a finite useful life, amortize the asset annually. That is okay. Then, intangible assets which have finite useful life, am I need to provide the impairment test every year? No need. Only if there is indication, then only I provide the impairment test for the intangible assets which have finite useful life. For the intangible assets which have infinite useful life, that should be tested for impairment every year, with whether there is an indication of the impairment or not. Then methods of charging amortization, same SLM method, written on value method, and units of production method. The formula as per Ind AS 16 only. Then amortization of the intangible assets starts from when the asset is ready for use. Okay. The amortization ceases when the intangible asset is as on the date of derecognition or classified as a non-current assets held for sale. Okay. Then if there is a change in amortization method, useful life, residual value, it's a change in accounting estimate as per Ind AS 8. So all these points are already covered in Ind AS 16. They are using the same words. Then this is an important one. Legal life of the intangible asset is irrelevant for the amortization. Estimated useful life is considered. In the previous day question, so the physical life is how much? 10 years generally. But the useful life, at how many years the company is going to use this asset in the production activity? 4 years. In that case, what is the useful life? 4 years. So this point is useful for MCQ and as well as practical, as well as for question solving. And disposal of intangible assets or derecognition. When we sold the intangible asset, the gain or loss is there, right? So that should be transferred to P&L, not categorized as a revenue. Then intangible assets is derecognized on the disposal or when there is no future economic benefits. There is no future economic benefits are arising from this asset, then at that case I should derecognize it. Whenever I dispose this asset, then I should derecognize from the books of accounts. That's all. Only there are 2 questions are there. Only their focus is on the practical aspects is on focusing on only when the expenditure is incurred, whether it is incurred in development phase or research phase. If the expenditure is incurred in research phase, that should be transferred to P&L. If it is incurred in development phase, question number 1. A Limited engaged in research to develop the new production technology. So they wanted to generate the intangible assets internally. So it's a internally generated intangible assets. So how should we record the internally generated intangible assets? First we will look into how much expenditure incurred in research phase, how much incurred in development phase. So the expenditure incurred on new production process in 21-22 was as under. 1st April to 31st December and 1st January to 31st March. So these are the expenditures. So they are given the expenditure in 2 periods. I don't know which period is the research phase or which period is the development phase till now. I need to go further to get the more information. Please tell me the dates. 1st April to 31st December. So 1st April, tell me the year. 20, it's 21-22, right? Okay. 2021. So 31st December 2021. Then again it is 31st March 2022. So how much expenditure incurred during 1st April to 31st December? 5,400 lakhs. 5,400 lakhs. Then in this period 1,800. So for 1,800 lakhs. Here our question is, which amount should be recognized as intangible assets, because it is a internally generated intangible assets. So the production process met the intangible asset recognition criteria for the development on 1st January 2002. What is the word I should focus? Development. Okay. So intangible asset satisfies the recognition criteria for development on 1st January 2002. So from 1st January 2002, whatever the expenditure incurred should be recognized it as intangible asset. So I can say that this is development phase. and I can say that this is research phase, and I know the amounts also. It should be transferred to P&L and it should be recognized as intangible assets. That's all. Then let's look at the question. Then after that, the amount estimated to be recoverable from the process is 1000 lakhs. The amount estimated to be recoverable from the process is 1000 lakhs, and expenditure incurred in financial year 22-23 is 6000 lakhs. Again in 22-23, how much expenditure incurred? 6? Okay. 6000 lakhs. This 6000 lakhs should also be recognized as intangible asset, because all these expenses are incurred after the development phase, right? Then in which year? 22-23. So 31st March 23. Then at March 31st 2023, the amount estimated to be recoverable from the process is 5000 lakhs. How much? Okay. And as given, the amount estimated to be recovered from the process is 1000 lakhs. When it happened? On 1st January. On 1st January means 31st December. On 1st January, the recoverable amount of intangible asset is 1000 lakhs. On 31st March 2003 is, what is the recoverable amount on 31st March 2003? 5000 lakhs. These are the recoverable amounts. How much? 5000 lakhs. These are the information available. First, you should recognize the intangible assets. Okay. So the estimated is the amount estimated to be recoverable from the process is 1000 lakh rupees. Okay. Hasn't given the date. Is he taken on that date? So has taken on 31st March 2022. So the amount, sorry? Development is on 1st January, okay. Okay, I will give you the answer. So the amount estimated to be recoverable from the process 1000 lakhs. But he hasn't given the date, right? So the previous information is as on the date of 1st January. So 1st January 2002, let it be. So I have taken that amount. Now first, you should recognize the asset. Let's see the questions also. So the carrying amount of intangible asset 31st March 2022 and profit or loss for 21-22, and the carrying amount 31st March 23 and the profit or loss 22-23. These are the elements. Now tell me, the expenditure of 5400 lakhs, okay, should be transferred to P&L. Should be transferred to P&L. As it is incurred in research phase. As it is incurred in research phase. Listen to me carefully. So it's completed. Then second aspect, I should recognize the intangible asset, right? So I should recognize the intangible assets. So at what amount I should recognize intangible assets? So here, now tell me the journal entry for this first one. Research phase. Research phase involves cash outflows. So P&L account debit to, you can write it as a direct entry. Okay, cash account. How much? 5,400 lakhs. 5,400 lakhs. Next, I need to calculate the carrying amounts of the intangible assets, right? For every year. That is the question. So now I need to find out the carrying amount of the intangible asset as on 31st March 2022. 31st March 2022. So I will start from this. When intangible asset came into books, on which date? 1st January 2021. Okay, 22. So from this date onwards, I can recognize my intangible asset. They have given the 1800 lakhs should be incurred during this period. I don't know like where it has been incurred. So entire during this period. So I can record it as on 1st January, or you can record it as 31st March also. Okay. But all the expenditure is incurred up to 31st March is 1800 lakhs, right? So on 31st March, instead of this, I can write it as directly. On 31st March 2022, what is the carrying amount of my intangible asset? Carrying amount of intangible asset $1,800 lakhs. This is the carrying amount of intangible assets. Now has given the one information recoverable amount. Here's why they are giving the recoverable amount for the impairment loss. The formula for the impairment loss, of course, there is a separate chapter we will discuss, but here currently the information required for you is impairment loss equal to super. So impairment loss equal to carrying amount minus recoverable amount. Carrying amount minus a recoverable amount. So use the code CR. Don't make it as recoverable amount minus carrying amount. So that's why remember it as a CR. Then carrying amount minus recoverable amount. By using this formula, I can able to find out the impairment loss. First thing, as per the Ind AS 36, you should provide the impairment loss on all the assets, whether it is a tangible or intangible. So as per that Ind AS 36 rule, so I should provide the intangible assets. I should provide the impairment loss here. How can you say that you are going to provide the impairment loss? Because the recoverable amount is given. So what is the factor for the finding out of the impairment loss? Recoverable amount. What is the recoverable amount? 1000 lakhs. What is the recoverable amount? 1000 lakhs. Then that case, I should provide the impairment loss. Here I have a doubt. The information is given on, generally the information is not giving the date. I don't know the recoverable amount on 1st January or 31st March 2022. How can I say that it is a recoverable amount on 31st March 2022? No. As per the Ind AS 36, while I have given the standard format, Purna, when should we provide the impairment loss always? At the beginning of the year or at the end of the year? Here what is the end of the year? 31st March 2022. So because of that rule, by remembering that rule in my mind, I can easily say that the recoverable amount is not given on 1st January 2022. By looking at this question, they haven't given any information, but the information is given on after the date of 1st January. So if you looking this information, you may have the thought of the recoverable amount is on 1st January 2022, but it is not correct. The recoverable amount is given on 31st March 2022, because the impairment loss is always providing at the end of the reporting period. Okay. Then now tell me, what is the impairment loss? Carrying amount. What is the carrying amount? 1800 lakhs minus what is the recoverable amount as the date? 1000 lakhs. 800 lakhs should be reduced. Then I got the closing carrying amount after impairment. I got closing carrying amount after impairment. What is the value? 1000 lakhs. Here my objective is, as per the part of fair presentation of the assets and liabilities, so I should show my asset at fair value. What is the fair value? 1000 lakhs. So I wanted to show all my assets at the correct value to the shareholders. What is the correct value? 1000 lakhs. So how I am achieving this objective? How I am showing? So I need to show my assets at the correct value. So this objective is achieved by providing of the impairment loss on the assets. Okay. Because of this, the asset value should be reduced to fair value. Then we can able to show the asset at correct value to the shareholders. Then I need the value as on 31st March 2023. What is the opening carrying amount? What is the opening carrying amount? 1000 lakhs. Are we incurred any expenditure during 22-23? Yes, 6000. Next, expenditure incurred. So it's an addition. Okay. So for the opening carrying amount, I should make additions and deletions. After that, I should provide the revaluations. After that, I should provide the depreciation or amortization. After that, I should provide impairment. Then I got the closing carrying amount after impairment. Okay. So the expenditure incurred during 22-23, 6000 lakhs. Now it becomes 7000 lakhs. Are they giving? Okay, my question is, so I should provide the amortization also, right? Are they giving any useful life? No, first thing. And second thing, it's in still development phase only. When should we start at the amortization or depreciation? When the asset is ready to use. Still the asset is not ready to use, right? Okay. We can take put use. Generally take the word ready to use. Okay. Ready to use. Okay. In most of the problems they are giving the ready to use only. Yeah. Okay. Next. So this is the carrying amount before impairment. Yeah, this is the carrying amount before impairment. How can we say that we need to provide the impairment? Because the recoverable amount is given in the question. So with that hint, I can say that we need to provide the impairment loss. What is the impairment loss formula? So okay, carrying amount minus. So recoverable amount is 5000 lakhs. 2000. So then it equals to 5000 lakhs. So closing carrying amount after impairment. Now tell me what happened. Okay. So in the question they are asking what is the carrying amount and how much is charged to P&L financial year 21-22, and is asking carrying amount and is asking how much charged to P&L 22-23. Now I know the carrying amount as on 31st March 22 1000 lakhs and 31st March 23 5000 lakhs. Now how much expenses transferred to the P&L in 21-22? Expenses transferred to P&L, expenses transferred to P&L during 21-22. Tell me how many elements should be transferred to P&L during 21-22? 5000. That's all. Apart from this, nothing. 800. Super. Impairment loss. Now tell me. So total research expenses 5400 lakhs, impairment loss. What is the impairment loss? 800. Super. Total amount transferred to P&L 6200 lakhs. Next, expenses transferred to P&L during 22-23. Okay, expenses transferred to P&L during 22-23. So there is only impairment loss. What is the impairment loss? 2000 lakhs. Okay. So here what is the final carrying amount? 1000 lakhs. Final carrying amount on 31st March 1000 lakhs. Okay. What is the impairment loss here? 2000 lakhs. Here also impairment loss is 800 lakhs. The first question is completed. So remaining questions ignore it. Okay. In days 38 you no need to do all the questions. The question number 1 is enough. It covers the impairment loss aspect and as well as which one? Normal recognition. But only some tricky here, the amount of estimated to be recoverable from the process is given 1000 lakhs, but I don't know the recoverable amount of the intangible asset on which rate. So general assumption is always I need to provide the impairment loss on the closing carrying amount. So that's why I assume that the recoverable amount is given on 31st March 2022, not on 1st January 2022. That is the special point. If you are able to identify that point, remaining everything is same. Then remaining questions just ignore it. Look number 1 minute. So the next question is, 1 minute. Okay. Question number 2. Only these two questions are there in Ind AS 38. Remaining questions, ignore it. You can strike off it from your books. If at all, if anybody received the old versions, you can strike off all the questions from the Ind AS 38. So these two questions are relevant. That's all. So Atma Tulsi Limited, which is developing a new production process, provides you the following. The total expenditure incurred on this process is 100 lakhs, of which 44 lakhs incurred before 1st December 2020 when the production process met the criteria for recognition as an intangible asset. So question number 22. Sorry, question number 2. Question number 2. So 2021. So it starts with 2021. So 1st April 20. Okay, then 1st April 21. Sorry, 31st March 21. Then again 31st March 22. How many years are there? 23. Then 31st March 23. So let's look at what are the changes made during the respective years. So the total expenditure incurred in the process 100 lakhs. Okay. In 2021, what is the total expenditure? 100 lakhs. What is the total expenditure? 100 lakhs. Okay. Out of this 100 lakhs, $44 lakhs incurred before 1st December. What is the relevant of the 1st December? So the development phase starts from 1st December. So when the production process met the criteria for recognition and intangible asset. So we can recognize from that date whatever the expenses incurred should be recognized as intangible asset. So 1st December. This is 1st December. 1st December 2020. So 44 lakhs incurred before the 1st December. How much incurred? 44 lakhs incurred 44 December. It means 100 lakh minus 44. These 50 lakhs are incurred after 1st December. So this 44 lakhs should be transferred to P&L. These 56 lakhs should be recognized as intangible asset. Then let's see what are the next elements. From here onwards, we will try to solve the problem immediately. So, as on 31st March 21, what is the carrying amount? I need the carrying amount of the intangible asset. Carrying amount of intangible asset. How much? 56 lakhs. Then during 21-22, the development phase began on 1st April 2021 and completed after an incurring an expenditure of 400 lakhs. Okay. Some development phase is also started on 1st April. So with that they have incurred expenditure of 400 lakhs. So how much? 400 lakhs. it has incurred in development phase. He started that some development phase is there with respect to one asset. So, that also incurred the 400 lakhs. So, when it happened 21, 22, how much it is? 400 lakhs. So, this is a development phase. Okay. So, that is all. Is there any information in 21, 22? No, nothing. So, what I am going to do? I should add it to the remaining cost of the asset. So, as on 31st March 2022, what is the carrying amount of intangible asset now? Carrying amount of intangible asset. So, let us see, we can write it as opening carrying amount or the opening carrying amount 56 lakhs. So, the expenditure incurred during 21-22. The expenditure incurred during 21, sorry, okay, 21-22. So, this is 22, okay. So, 21-22, 400 lakhs. So, what is the total? So, the closing carrying amount as on 31st March 2022 was 456 lakh. Okay. Then let us see what happened next year. In 22-23, so from 1st April 2022, the company implemented the new process design which will result in a after tax cost savings of 100 lakhs per annum for the next 5 years. The company cost of capital is 10%. What is the relevance of this information? What is the relevance of this information? So, he is given some information, I do not know what is, but I will remind you what is the formula for impairment loss? Impairment loss equal to carrying amount minus recoverable amount. What is meant by recoverable amount? For the calculation of the recoverable amount, one of the element is, not talking about whole thing. So, you just remember one element. For the respect of this problem, you can get the better clarity while we are solving the Ind AS 36. But here, the recoverable amount equal to present value of the future cash flows. Present value of future cash flows. So, in the question number 1, they have given directly recoverable amount. In question number 2, they haven't given directly recoverable amount, they are given with the name of present value of the future cash flows. What are the future cash flows? 100 lakhs per annum for the 5 years. So, what is the cost of capital? 10%. So, what I am going to do? So, what is the present value in the anti-factor? 3.79. So, I need to find out the present value of the future cash flows. It equals to recoverable amount. So, I got the recoverable amount as on 1st April 2022. I got the recoverable amount on 1st April 2022. What does it mean? Why they are giving the recoverable amount value on 1st April? I am just asking why they are giving the information of the recoverable amount, because he has given the hint you should provide the impairment loss. But what is the rule? When should we provide the impairment loss? At the beginning or at the ending? Ending. But they are given on 1st April, right? But I do not know what they are giving. Just from the 1st April, the company implemented the new process design which will result in a after tax cost savings. Then what we are going to do? given the information in 1st April 2022, it means 31st March 2022, right? Instead of taking 1st April 2022, I can say that it is a 31st March 2022 information. Then I can provide the impairment loss at the end of the year. The both rules are satisfying, right? And take. So this is the closing carrying amount before impairment. Before impairment. Then what is the recoverable amount? So I need to provide the impairment loss, right? So minus impairment loss. For the impairment loss, I need to do carrying amount minus recoverable amount. I don't know what is the recoverable amount, so I need to find out it. So recoverable amount equal to present value of future cash flows. Okay. Then how many cash flows are there every year? 100 lakhs. So 100 lakhs into 3 point. So I can say that cash flows into present value annuity factor. Present value annuity factor for 5 years at the rate 10%. So what is the cash flow every year? 100 lakhs. What is the present value annuity factor? 3.79. So it is 379 lakhs. This is the recoverable amount. So now what is the carrying amount? 456 lakhs. Recoverable amount 379 lakhs. 7. Okay, impairment loss 77 lakhs. Okay. Now, what is the closing carrying amount after impairment? So 456. Okay. So, okay, super. 379 lakhs. So this is the closing carrying amount. It will record here. So it's a closing carrying amount after impairment 379 lakhs. Okay. Then again, is there any information during 31st March 23? Nothing. And what is the expenditure to be recognized as an expenses in the statement of P&L for the year ended 31st March 21? So for the year ended 31st March 21, so carrying amount 56 lakhs. There is no impairment during 2021. Okay, so there is no P&L. But this 44 lakhs should be transferred to P&L during 2021. Rupees 44 lakhs should be transferred to P&L during, tell me the dates, 2021. So this is the amount should be transferred to P&L during 2021. And what is the carrying amount? What is the carrying amount as on 31st March 2021? 56. Both are coming. Then coming to next question. What is the carrying amount of intangible asset as at March 31st 21 and March 31st 22? What is the carrying amount? 56 lakhs. The carrying amount on 31st March 2022? 379. It's not 456. Okay. It's 379 lakhs. Okay. Next, what is the cost of internally generated intangible assets to be recognized? So what is the cost of internally generated intangible assets to be recognized? So the total cost is total cost of internally generated intangible asset, how much? Here 56 lakhs, here 400 lakhs, total 456 lakhs. So these are the costs we have recognized in intangible assets. After that it has been reduced because of impairment. Okay. What is the next element? So what is the expenditure to be recognized in expenses in the year 31st March 2022? So 21-22 only 77 lakhs. Impairment of how much? Tell me the 77 lakh should be transferred to P&L during 21-22 as impairment loss. For example, okay, here 77 lakh should be transferred to P&L, right? In 2020, here in 21-22, right? In 2021, there is an revaluation gain. So the revaluation gain should be transferred to OCA. So there is a balance of 50 lakhs. In revaluation gain with respect to this asset, there is a OCA balance of 50 lakhs. Now, how much amount should be transferred to P&L this year? Super. 27, because the entire loss should not be transferred to P&L. The loss should be set off against the previous gain initially. The remaining balance should be transferred to P&L. Then what is the amount of the amortization of intangible asset to be recognized and expenses in the statement of P&L for the year ended 31st March 23. So we are on 31st March 2022. What is the closing carrying amount? 379 lakhs. Now tell me. So I need the carrying amount as on 31st March 23. I need the opening carrying amount. What is the opening carrying amount? Opening carrying amount 379 lakhs. Okay. So I should, is there any revaluations, is there any impairments? There is nothing. Nothing is there. So in the previous calculations, I haven't provided any amortization on these intangible assets, right? Then why I need to provide amortization during 2023, especially, during 2023, why I need to provide the amortization? Sorry? Can I give you my mic? No. Then say it with a loud noise. How can I say that? How would I know that? Whether I need to provide the amortization expenses during 22-23. Of course, it is asking the question, what is the amortization? What is the amount of the amortization during 22-23? But it has given in the question. So you are okay, what you are going to do? You are incurring an expenditure or you are generating one intangible assets. With this intangible assets, you are going to receive the cost savings. You are going to receive the cost savings. For how many years? 5 years. Indirectly, it has given the useful life. Indirectly, it has given the useful life of 5 years. So because of this hint, I should provide the amortization. Then, so opening carrying amount minus amortization expenses during 22-23. Amortization expenses during 22-23. How much? What is the formula? Opening carrying amount minus, is there any residual value? No, 0, divided by remaining useful life 5 years. Sorry, 75.8 lakhs. Then I got the closing carrying amount. $379 minus 35.3 not. Okay. So this is the closing carrying amount as on 31st March 23. And what is the amortization expenses? 75.38. What is the carrying amount on intangible assets? 303.2 lakhs. So all the elements are covered. Okay. 303.2. Okay. Next. Please take a break. Okay. Hello. Okay. Okay. The next chapter is Ind AS 36, impairment of assets. So the name of the the name of the Ind AS is Ind AS 36, impairment of assets. So what is meant by impairment? Impairment is reduction in the value of the asset. Reduction in value of the asset. How can we say that there is a reduction in the value of the asset? Because there is some comparison amount, right? What is the comparable amount? Carrying amount. Okay. When you compare your fair value of the asset to the book value of the asset, then there is a reduction in the carrying value of the asset when compared with the book, when compared with the market value. So that reduction should be need to shown in books. So that is called impairment. The impairment definition means, what is meant by impairment? Reduction in the value of the asset. Reduction in the value of the carrying amount of the asset when compared with the market value. So let's say the market value is 5 lakh rupees, but in your books you are showing that asset value, book value equal to 6 lakh rupees. Is it fair presentation? No, right? So this is not fair presentation. So I need to show my assets at the fair value of the assets. So I want to reduce my 6 lakhs asset to 5 lakh rupees. So I should deduct 1 lakh rupees. That is called impairment. That is called impairment. So generally. So here at what amount I should be compared? Market value, but it's not market value. I need to give some name, recoverable amount. What is meant by recoverable amount? Recoverable amount means general aspects. Recoverable amount means how much I am going to recover from this asset. I can recover the cash flows from the asset in two ways. First, sale of the asset. Second, by the usage of the asset. Okay, how much amount I can recover from this asset by the sale of the asset or by the usage of the asset. If at all, recoverable amount equal to, if sale of the asset, how much cash flows I can generate from it. Sale amount, it means fair value minus cost to sell. For selling I can incur some expenditure, right? So this is one amount. Then second thing, from the usage of the asset. From the usage of the asset I can get the cash inflows over the period of time. So I can do present value of the future cash inflows. It is called value in use. So what is the recoverable amount? Whichever is higher, that is the recoverable amount. Okay. So now I need to show the asset at recoverable amount as per the Ind AS 36. But it doesn't showing, doesn't giving that directly you need to show the asset at recoverable amount. It has given one hint that you should provide the impairment to your assets. What is the impairment? When you compare with the recoverable amount, if your carrying amount is less than the recoverable amount, so you should reduce your carrying amount to the recoverable amount. So you should reduce 6 lakh rupees to 5 lakh rupees. It means what is the net reduction value? 1 lakh rupees. That 1 lakh is called the impairment. Whether I should provide the impairment on all assets, I am talking about the scope of Ind AS 36. Whether I need to provide the impairment means, whether impairment means reduction in the value of the asset as per the Ind AS 36 on all the assets. Here what I am asking is whether Ind AS 36 is applicable to on all assets. No, it would not be applicable to all the assets. So let's see the exclusions from the scope of the standard. So write down, please note it down, one exclusion, that is inventories. here Ind AS 36 impairment of assets what is meant by impairment? Reduction in the value of the asset. Reduction in the value of the asset. So here asset means asset may be tangible, assets, intangible assets. Okay, intangible assets. So here my question is whether I need to provide as per Ind AS 36 impairment on all assets or is there any exclusions? So there are some exclusions also. For those kind of assets there is no need to provide impairment. Example for exclusion of the asset from Ind AS 36. Please note it down because there is one problem and that problem this exclusion will be useful. It's like an adjustment for the solving of the one problem. That adjustment is I am giving it as an exclusion example. Okay. Some assets are excluded from the scope of Ind AS 36. Some assets are excluded from the scope of Ind AS 36. It means no need to provide impairment on these assets. So what is the rule? So as per Ind AS 36, the impairment should be provided on all assets. What are the exclusion for this rule? So for some assets are excluded from the scope. What is the example? What is the example from exclusion? It is inventories. So I will tell you the logic also. Why inventories are excluded from the scope of Ind AS 36? Depreciation. No depreciation. Okay. But generally here what is the objective of providing of the impairment? As per Ind AS 36, what is the rule? I am telling you the rules. So need to provide impairment on all assets. Okay. So this is the Ind AS 36 rule. Why this rule is implemented? What is the, by implementing of this rule, what objective is achieved by the financial statements? With this objective, what we are going to do? We need to show our assets values at correct carrying values. We need to show our assets at correct fair values. Okay. We need to show our assets at fair values. Okay. That is the objective. To show our assets at fair value, or we can show less than or fair value. That's okay sometimes. But we should not show our assets more than at fair value. So that's why they introduced the concept impairment. Impairment means carrying amount minus recoverable amount. Then asset is reduced to the recoverable amount. Then we have achieved the objective of we need to show our assets at the recoverable amount. That is the objective. But here, why they have excluded the inventories? With respect to the inventories, as per Ind AS 2, okay, Ind AS 2 or whatever the AS also, the rule is the inventory should be shown at cost or whichever is lower. What is meant by recoverable amount? Of course, one of the formula fair value less cost to sell, right? So here already our inventories are shown at net realizable value. Then what is the point of providing impairment? What is the purpose of providing impairment? I need to show my assets at fair value. Already in the form of net realizable value, I am showing my asset at fair value, right? Then there is no need to provide the impairment on inventories. Okay. This example is useful for you for the solving of the question. Give the reference here itself. Question number 8. As per the new version, question number 8. Please tell me your old version number. This question. LIA Limited is a manufacturing company. So is that question number is it a question number 8 in question number 12? Okay. Question number 8 in newer version. And it is question number 12 in old version of your workbook. Okay. This point will be useful over there. So what is the rule? As per Ind AS 36, the impairment should be provided on all assets. So this objective should be achieved. Now I will give you the what is the impairment loss formula. So we know that impairment equal to impairment loss equal to carrying amount minus recoverable amount. Okay. Impairment loss equal to carrying amount minus recoverable amount. If you confuse between the it is carrying amount minus recoverable amount or recoverable amount minus carrying amount, use the code CR. Okay. Here I can easily recognize, but while you are doing the sums or after some point of time, definitely confusion might arise. Okay. So CR, impairment loss equal to carrying amount minus recoverable amount. So my question is, for example, carrying amount is 6 lakhs. Okay. But recoverable amount is 7 lakhs. Then in this case, there is no impairment. Okay. So you should first whether I should provide the impairment loss or not. For that I need to compare your book value and recoverable value. If your recoverable value, your market value is greater than the carrying value, then no need to provide the impairment loss. Okay. So this is the formula. Then what is the carrying amount? What is the carrying amount here? So I have shown, I have discussed so many carrying amounts. There are opening carrying amount before revaluation, opening carrying amount after revaluation, minus after deducting the depreciation I can get the closing carrying amount after depreciation but before the impairment, and after that I am going to impairment. So for the impairment, what is the bottom line? Closing carrying amount after depreciation. Closing carrying amount after depreciation but before impairment effect. Recoverable amount. Recoverable amount. They are giving two elements. What was there? Fair value less cost to sell. Fair value less cost to sell. Cost to sell or value in use. Value in use means will give you present value of the future cash flows here, but fair value less cost to sell. Sir, how can we calculate the fair value? Generally it is going to be given in the question. Fair value means more or less nothing but market value. So it's a cost to sell means what are the expenses incurred to sell this product in the market. Okay. So with respect to fair value, how to calculate the fair value we can discuss in Ind AS 113. Okay. So recoverable amount is fair value less cost to sell or value in use, whichever is higher. So these all elements you know it, okay. But I am here to discuss something. Value in use equal to present value of the future estimated cash flows. What was that? Present value of future estimated cash flows generating from the respective asset. Okay. Present value of the future estimated cash flows generating from the respective asset. Respective asset. Now here, now tell me, what is the rule as per Ind AS 36? Should provide impairment on all assets. Of course, if there is an exclusions, there is no need to provide. There should not be provide impairment as per Ind AS 36 on excluded asset. But here, one more thing I need to discuss. Value in is equal to present value of the future estimated cash flows generating from the respective asset. Here for this, for the providing of, as per the rule 1, I need to provide the impairment on all assets. For providing of the impairment, I need recoverable amount. Without recoverable amount, I cannot provide the impairment loss. Without fair value less cost to sell, can I take it as a value in use as a recoverable amount? For example, in question, fair value less cost to sell information is not given. Can I take it as recoverable amount equal to value in use? Yes. Second thing, value in use is not given in the question, but fair value less cost to sell is given in the question. Can I take recoverable amount equal to fair value less cost to sell? No. So value in use information is mandatory. Okay. Without value in use, we cannot find out the recoverable amount. But fair value less cost to sell is an option. For value in use is the compulsory. So if both information is available, I can take whichever is the higher amount. If value in use information is not available, we cannot find out the recoverable amount. I cannot say recoverable amount equal to fair value less cost to sell. Okay. So note down that point. Without value in use, we cannot compute recoverable amount. Okay. But in the absence of fair value information, I can assume recoverable amount equal to value in use. But we cannot say that in the absence of value in use information, recoverable amount into fair value less cost to sell. We cannot say that. Okay. So value in use information is compulsory in case of recoverable amount. If value in use of any particular asset is unable to identify, in that case you cannot able to provide the impairment on the respective asset. Okay. But here, what is the rule? Should provide the impairment on all the assets. So here what I am trying to say is, for few assets I am unable to calculate the present value of the future cash flows, because it is highly impossible to calculate the how much revenue this asset is generating to the organization. So always the group of assets, the collectiveness of the group of assets is providing the cash flows to the organization. So I don't have present value of the future cash flows of the respective asset, but I can have the present value of the future cash flows of the group of assets. So I can have the recoverable amount of the group, I can have the carrying amount of the group. How can I have a carrying amount of the group? Carrying amounts of all the individual assets, the sum of carrying amounts of all the group of assets is, we can get the carrying amount of the group. I can compare this carrying amount of the group with the recoverable amount of the group. I can have the impairment loss of the group, and this impairment loss I can allocate it to the all the individual assets in the carrying amounts ratio. So in this manner I can provide the impairment to all the assets, even though I am unable to find out the value in use for a particular asset. Here my objective is achieved, right, as per the rule 1. But if I going through the normal valuation impairment rules, I cannot provide individually for the impairment of this asset. But my ultimate objective is I should provide the impairment loss to the every asset. In that case, I use the group of assets information. So for the providing of the impairment to the assets for which I cannot find out the value in use, so what I am going to do, I am using the technique of cash generating units. Like I can able to find out the impairment on group of assets, then total impairment should be allocated to the individual assets. Okay. So here entire our impairment loss problems focusing on impairment loss should be provided to individual assets, Okay, then we should provide the impairment loss on group of assets. Impairment loss on group of assets. Then one more thing, I should provide impairment loss on goodwill also. So I should provide impairment loss on goodwill. So goodwill is recognized in our books. Can I record internally generated goodwill in my books of accounts? Can I record internally generated goodwill in my books of accounts? I can. So whatever the goodwill appearing in my books is, it's a goodwill acquired as a part of business acquisition. So we should provide the impairment on this goodwill also. One more thing, I wanted to connect with some other subjects also, some other chapters. Hello. How many types of goodwill? As per how this goodwill is arising? This goodwill is arising as a part of business acquisition, means as per Ind AS 103. As per Ind AS 103, how many types of goodwills are there? There is full goodwill, there is partial goodwill also. Super. Full goodwill means? Yes, exactly. The goodwill is arising, okay, in the business combinations in which the NCI is calculated fair value method. In that case, the resulting figure goodwill is a full goodwill. It means the goodwill is related to parent company as well as NCA. If you use NCA calculation by net assets method, then the resultant goodwill is called partial goodwill. The entire goodwill is related to parent company only. There is no share of NCA in this goodwill. Okay. Anyhow, I am going to have a discuss on Ind AS 103 also. I am just give some glimpse. Goodwill. So I need to provide the impairment loss on goodwill also. And what is the fourth aspect? I need to provide the impairment loss on corporate assets. I need to provide the impairment loss on corporate assets. So 1, 2, 3 and 4. Here my question is, I already given the formula, but as per the rules also, impairment should be provided in all assets. Then why this classification is needed? What is the purpose of this classification? Because for some assets, I am unable to find out the value in use of that respective asset. So because of that, I should grouping it as a, I should include it as a total of the assets. So here, then goodwill. Can I able to find out the present value of the future cash flows arising out of goodwill? We cannot find out. Okay. So that's why goodwill also should be allocated to the cash generating unit. Then what about corporate assets? Corporate asset means like administrative buildings. So there are 2 factories, 1 office. So how much income is generating from that factory depends on the number of units produced from that factory. But how can you say that how much cash is or how much revenue is generating from this corporate building? I cannot say that, right? So what I am going to do? But as per the rule, I should provide the depreciation on this corporate building also. So in this case, I already created a group of assets, CGU1, CGU2, CGU3. CGU means it's a cash generating unit. In this unit, what I am going to do, I will identify this group. For example, I am saying what is the cash generating units, all these are technical terms. So I will tell you in a simple way. So our BCC is a CMA college, or BCCA, so CMA and CA college also, but let's say CMA wing. In CMA wing, so this classroom is there. there are a lot of benches. Can I say that how much revenue is generated from a single bench? We cannot say it, but I can say that how much revenue is generating from the CMA final class. Now the cash is generating from the CMA final class by using of all these assets as a group. So what I am going to do, I can able to find out the cash flows of the CMA final classroom, but I cannot provide the impairment loss for the individual asset because I don't know how much cash flow is generating from each individual asset, but I can say that the cash flow is generating from group of assets. So I can created one group like CMA final group is one CGU. This is a cash generating unit. In this cash generating unit, I can allocate all these benches, this laptop, this furniture, this projector, all these assets are grouped under this CGU. So I can able to find out the recoverable amount of this CMA final classroom, right? So this is the recoverable amount of the CGU. Then what is the carrying amount of this CGU? Carrying amount of benches, carrying amount of this laptops, carrying amount of this projector. So I have the carrying amounts, I have the recoverable amount. Then I got the impairment loss, and this impairment loss should be allocated to all the assets in the respective carrying amounts. Strictly saying not in the respect to carrying amounts, in the respect to carrying amounts into number of years. Okay, in that ratio we should allocate. Now corporate assets are there. Then how should we provide the impairment loss on corporate assets? So I cannot able to find out the cash generating units of the corporate assets. In that case, these corporate assets should be allocated to the CGUs. There are 4 CGUs, mean there are 4 classrooms, CMA final, okay, CMA final and CMA inter and CMA foundation as well as CA final. There are 4 classrooms. So I can able to find out the cash generating from each classroom. Okay. So the assets there in the each classroom can be grouped it as a separate CGUs. So 4 CGUs are there. So how can I allocate these corporate assets? If you able to, in corporate assets there are 2 types. Allocable corporate asset, non-allocable corporate assets. Allocable means this corporate asset can be allocated to CGU 1, 2, 3, 4 depends on some ratio. After that it should be added to the CGUs. Then after that I can able to find out the recoverable amount of CGUs, and after that I get the impairment loss, and this impairment loss should be allocated to corporate assets also based on how much carrying amount should be included in the CGUs. Okay. Then how to find out the non-allocable assets for the impairment? In this case, non-allocable corporate assets means I cannot say that these assets can be allocated to CG 1, 2, 3, 4. In that case, what I am going to do, I can able to find out the what is the total revenue generated from the entire organization, right? So it is a total revenue of the entire organization, total carrying amount of the all the assets in the organization. In that case, I can include the non-allocable corporate also as non-allocable corporate assets in the group. In that case, I can able to find out the total carrying amount of the company, total recoverable amount of the company. Then I can provide the impairment loss for the entire company, and this impairment loss should be allocated to all the assets in their carrying amounts. These are the objectives. So corporate assets, allocable and non-allocable. Allocable, non-allocable. Non-allocable corporate assets. Now first we will start with the individual assets. Question number 1. So look at here. So I have all the formulas, right? So I have all the formulas. So with the help of these formulas, I can able to provide the impairment loss. Here what is the fair value less cost to sell, recoverable amount, impairment and carrying amount of the machine after impairment. Let's look at the question. A Limited has a mission whose original cost is 45,000 and the accumulated depreciation is 15,000. So you should have the knowledge of Ind AS 36 and Ind AS 38 before proceeding into the Ind AS 36. So you should have the knowledge of Ind AS 16 PPE and Ind AS 38 intangible assets for solving the problems of Ind AS 36 impairment. So what is the original cost? 45,000. What is the accumulated depreciation? 15,000. And similar machine has recently sold in the same locality at 25,000 with the selling expenses 2,000. Then the management determined the entity specific present value of the future cash flows of the machine is 28,000. So find out the fair value less cost to sell. What is the fair value in this problem? So I can able to sell this asset in the market 25,000, that is called fair value, minus what is the cost to sell? 2,000. So 23,000 is the fair value less cost to sell. And what is the recoverable amount? Now I need the formulas. Fair value less cost to sell, cost to sell or value in use, whichever is higher. What is fair value less cost to sell? 23,000. What is value in use? Value in use, present value of the future cash flows already given 28,000. Whichever is higher? 28,000. So the recoverable amount is 28,000. So here, wait. What is the impairment loss? What is the formula for impairment loss? Carrying amount minus recoverable amount. Already we had the recoverable amount. So here carrying amount means what carrying amount? Carrying amount after, carrying amount after depreciation before impairment. So I bought it for 45,000, accumulated depreciation 15. How much? 30,000. So here, 1 minute. Here carrying amount is greater than recoverable amount, then we should provide the impairment. So if the carrying amount is greater than carrying amount, then there is no need to provide impairment loss. The recoverable amount is greater than the carrying amount, there is no need of providing of impairment loss. Now tell me the impairment loss. 2,000. What is the carrying amount of the machine after impairment? 28,000. So initially, what is the net carrying amount? So net carrying amount 30,000 minus what is the impairment loss? 2,000. So closing carrying amount after depreciation before impairment 30,000 minus impairment loss 2,000. Then I got closing carrying amount after impairment 28,000. Okay. Then question number 2. So we have completed how to provide the impairment on individual assets, then how to provide the impairment on group of assets, means CGUs. Group of assets, we will call it as a cash generating unit. So entity has following assets with the relevant data on the reporting date. So asset C and asset D were revalued before. So there are group of assets. Come here, look at here. There are group of assets. In this group of assets, coming to asset C, I am unable to find out the value in use. But I have fair value less cost to sell. But I cannot say that recoverable amount equal to fair value less cost to sell. So I definitely should have value in use. But asset C, I don't have value in use. What I am going to do now? So this asset E should be included in any cash generating unit. I should be grouped it into cash generating, other assets which can generate the revenues with the help of this asset E. So now coming, asset C and D are revalued before, has given some information, leave it. And the revaluation amount of surplus were 40 lakhs and 30 lakhs respectively. I will tell you why this information is given. We are doing the impairment losses, right? So we are focusing on the how to provide the impairment losses. Why this information is given, how it is relevant. because see if it is a, 1 minute, I need to provide the impairment loss. What I need to check? Whether it is a first time impairment loss or second time, like it is a subsequent revaluation. If it is a subsequent revaluation, I need to check is there any OCA with related to respective assets. If OCA is related to respective asset, what I am going to do? The current impairment loss should be set off against OCA balance first, then the balance should be transferred to P&L. So I assume there is no any revaluation gains with respect to current assets. Now I wanted to provide the impairment loss for the first time, then the entire impairment loss should be transferred to P&L. For that aspect I has given the information. Let's see. And asset E falls in the cash generating unit of consisting of goodwill 50 lakhs and intangible asset 90. So one group is there, we have identified. So we have included this asset E in that group. So let's see what are the assets in that group. Group name is, like how you call that group in this intangible, impairment asset terminology, cash generating unit. The group name is cash generating unit. Shortcut we can call it as CGU. So in this group, how many assets are there? So asset E falls in the CGU, in that consisting of goodwill 50 lakhs, intangible asset 90 lakhs. So in this group we newly included asset E also, because for this also I am unable to find out the value in use individually. Can I find out the value in use for the respective goodwill? No. Always I cannot find out the goodwill value in use, that's why always it should be included in the CGUs. Okay. If more than one CGU is there, the goodwill should be allocated to the CGUs based on their carrying values. Okay. Now I got the, what is this 50 lakhs, 90 lakhs, 100 lakhs? Carrying amounts. Okay, these are the carrying amounts. So I don't know the recoverable amounts. Okay. Now one more thing. So what is the total carrying amount of the group? 240. 240 lakhs is the group. So what is the recoverable amount of the group? Here they are giving the fair value less cost to sell is, cost to sell of the CG is 180 lakhs and the value in use is 180 lakhs. So the recoverable amount means 180 lakhs, whichever is higher. So I know the recoverable amount of the group, I know the carrying amount of the group. Then what is the impairment loss of the group? Now always need to check, first thing, always needs to check, here there are assets. For few assets, I can able to find out the recoverable amounts, but still it is included in the group sometimes. Why? Because even though here, for example, I am saying, for intangible assets of 90 lakhs, I know the value in use of the intangible assets of 90 lakhs, that is 85 lakhs. Okay. Even though I know the recoverable amount, I should be included in this group. Why? Because generally I need to check, right? So whether how many of the assets grouply perform and need to provide the cash generating unit. I can able to find out the intangible assets recoverable amount, but I cannot able to find out this goodwill and this asset. But these are also giving economic benefits only if it is worked along with the intangible asset. Okay. So for the group purpose, for the purpose of identifying the recoverable amount of the entire group, I need to include this intangible asset in the group. Okay. Here what is the amount I given? 85 lakhs. What is the individual impairment loss? What is the individual impairment loss? 15. Sorry, 5. Carrying amount minus recoverable amount 5. Okay. So I can easily find out this individual impairment loss 5 lakhs. But here what I am going to do now, first find out the impairment loss of the group, okay, and after that I should allocate this impairment loss to the respective carrying amounts in their individual carrying amounts ratio. That is the rule. But exception to this rule is, if you are in that group, if you can able to find out the impairment loss for the respective asset, that is 5 lakhs. Okay. Now what is the total impairment loss? Tell me. 240 minus 180, 60. Now what I am going to do? Out of this 60 lakhs, 5 lakhs should be directly allocated to the intangible asset, that's all. Then the remaining amount should be allocated to the remaining assets. That is the rule. Okay. But currently there is no rule. I am changing it. I am incorporating all the changes in one problem only. I am just changing my example. Here recoverable amount is 100 lakhs. There is no impairment loss. Now my question is, am I need to provide the impairment loss to intangible asset? No. So intangible asset should be excluded from the providing of this group of intangible assets. So 60 lakhs should be allocated between goodwill and asset E in their respective carrying amounts. Okay. But the new rule coming into, if goodwill is included in that group, if the goodwill is included in that group, first rule, the entire impairment loss should be utilized for the entire derecognition of the goodwill first, and the remaining balance should be allocated to the remaining assets in the respective carrying amounts. Remaining assets in the respective carrying amounts. For the remaining assets, I need to check whether can I able to provide the individual impairment loss for that. If there is no individual impairment loss for the respective asset, then there is no need to allocate that impairment loss to that asset. Okay. Then sometimes in group itself, few assets should be included, that is inventory. If the inventory is included in the group, I got the 60 lakhs of impairment loss. Can I allocate this 60 lakhs to inventory also? Can I allocate this 60 lakhs to inventory also? No, because the rule, impairment loss should be provided on all assets, but there is an exclusion. This inventory should not be coming under the scope of Ind AS 36. Then we should not provide impairment loss to inventory. It means we should not allocate this impairment loss to inventory. Ignore it. Okay. Now coming to our original problem as it is. So what is the impairment loss? 60 lakhs. So what is the first rule? The impairment loss should be allocated to the goodwill first. Then the remaining impairment loss should be allocated to the remaining assets in their carrying amounts. So this 60 lakhs impairment loss should be allocated between goodwill first. What is the goodwill value? 50 lakhs. Then remaining 10 lakhs should be allocated between intangible asset and asset E in the respective carrying amounts. What is the ratio? 10:9. Okay. How much? 4.74. Remaining 5.26. Okay. These are the impairment losses. So now show the accounting treatment. They are asked show the accounting treatment. So I need to provide just question number 2. So what is the total impairment loss? 60 lakhs. Okay. Calculation of impairment loss of CGU. What is the carrying amount of CGU? 50, 90, 100. 50, 90, 100. What is the value, please? 240 lakhs. What is the recoverable amount of CGU? sorry, carrying amount of CGU and recoverable amount of CGU. How we can find out the recoverable amount of CGU? It is 180 or 170, right? Whichever is higher, that is 180 lakhs. And impairment loss of CGU, what is the value? 60 lakhs. Then rule number 1, impairment loss should be allocated to the goodwill first. Impairment loss should be allocated to goodwill first. Then remaining impairment loss should be allocated to remaining impaired assets. Use the word. Why I am using the impaired assets? If you are looking at the individually, if it is unpaid, then there is no need to allocate this impairment loss to that asset. So remaining impaired assets. Impaired assets means what? Impaired assets means other than non-impaired. Other than non-impaired. What is non-impaired? There is no impairment if you are looking at the individually. Okay. No impairment when compare individual carrying amount with individual recoverable amount. This point is very important. So we should allocate the impairment loss to which assets? Only impaired assets. What is meant by impaired assets other than non-impaired? Non-impaired asset, so what does it mean? So the impairment loss should not be allocated to the non-impaired assets. What is meant by non-impaired assets? So when we compare individual carrying amount with the individual recoverable amount, if there is no impairment, those assets are called non-impaired assets. So the impairment loss should not be allocated to those assets even though it is included in the CGU group. Okay. In the CGU. So this point you no need to write in an exam, but if you want you can write it. But this for CC. for conceptual clarity. Okay, this point is for CC. Then I got the impairment loss of CGU, right? So by following this line, what I am going to do, the impairment loss $60 lakhs should be allocated between first we should use this impairment loss to set off the goodwill completely. What is the goodwill value? 50 lakhs. So allocated to the goodwill first, 50 lakhs. What is the remaining amount? This 10 lakh should be allocated between the, what are the remaining assets? What are the remaining impaired assets? Intangible assets. Intangible assets and E. One more thing. So should be allocated to the remaining assets in the CGU in their carrying amounts ratio. Carrying amount ratio. Okay. So what is the carrying amount of intangible asset? 9? Okay, 90. This is 100 lakhs. Okay. Then. So 10 lakh divided by 190 lakh into 90 lakh. Here 10 lakh, sorry, 100 lakh, no, 10 lakh divided by 190 lakh into 100 lakh. 4.74 lakhs, here 5.26 lakhs. Now this impairment loss 60 lakhs is there. Now tell me the journal entry, please. Journal entries. Sorry. OCA transfer చేస్తాం. So what I show the accounting treatment here. What I did, so I found out the carrying impairment losses of. So what is the heading here? Calculation of the impairment loss of CGU. And what about the calculation of the impairment of individual assets? Calculation of impairment loss of individual assets. Tell me. Tell me the asset name. A, B, C, D. 4 assets. What are the carrying amounts? 280 lakhs, 460 lakhs, 220 lakhs, 180 lakhs. Okay. These are the carrying amounts. What is the recoverable amount? So fair value less cost to sell or value in use, whichever is higher. Tell me the higher values. 300 lakhs, 400, 270 lakhs, 170. Okay. Then what is impairment loss? Carrying amount, recoverable amount, impairment loss equal to 1 minus 2. Now tell me, what is the impairment loss with respect to A? 0. No impairment loss. With respect to B, with respect to C, no impairment loss. So 10 lakhs. So asset and B and D should be, we need to provide the impairment loss. Okay. So and apart for this, one information is available 40 lakhs and 30 lakhs. So with respect to asset C and asset D. Now please provide me the journal entries. Journal entries. First, provide me the journal entries for the impairment loss of individual assets. Sorry? P&L account debit to? Okay. So impairment loss account debit to? Okay, instead of using impairment, you are saying P&L account. No, let's provide the individual entries. Okay. So now tell me, with respect to asset A, there is no impairment loss. There is no need to provide any journal entry. Then with respect to asset B, we should provide the 60 lakhs, right? So impairment loss what is the impairment loss? 60 lakhs. Account debit to asset B. How much? 60 lakhs. And what is the next journal entry? With respect to asset D. So I should provide. Then after that, what is the journal entry here? Impairment loss should be directly transferred to P&L because there is no OCA with respect to asset B previously. So P&L account debit to impairment loss. $60 lakhs, 60 lakhs. Now tell me the journal entry. With respect to asset D, I should provide the 10 lakhs impairment loss. So impairment loss account debit to asset D. Asset D should be reduced, right? Asset D, how much? 10 lakhs, 10 lakhs. But here the entire impairment loss cannot transfer to P&L directly because with respect to asset D, there is a OCA balance in previous years. So how much OCA balance? 30 lakhs. OCA balance is 30 lakhs. So first I should use that OCA balance. So OCA account debit to impairment loss. How much? 10 lakhs. 10 lakhs. Then providing of the impairment on individual assets is completed. Let's come into group of assets. So in the group of assets, so first I should derecognize the goodwill, and after that I should provide the impairment loss to the extent of 4.74 on intangible, and after that I should provide 5.26 on E. Now tell me the journal entry. Now what is the total impairment loss of the group?
60 lakhs.
So impairment loss account 60 lakhs. Then impairment loss account debit to, tell me the assets. Goodwill. What is the goodwill value?
50 lakhs.
50 lakhs. Then what is intangible asset? 4.74 lakhs. To asset E, how much it is? 2. 5.26. 5.26. Okay. Impairment loss account debit to goodwill. Next, this goodwill shall be transferred to impairment loss, P&L account debit to P&L account debit to impairment loss. How much? 60. 1 minute, I will give you some information. Hello. Here goodwill is there, right? So with respect to the goodwill, what is the form? What is the journal entry? Impairment loss 50 to goodwill 50. Now I wanted to transfer this goodwill. This loss should be. So here what I am writing, P&L account debit to impairment. If at all, in question we have the information 80% parent company, 20% NCA. Then in that case, P&L account 80% and NCI 20% to impairment loss. So it means if subsidiary company is earning 100 rupees, it should be allocated between H Limited, holding company and NCA in their proportion issue. In the same way, this is the loss, right? And this loss is also should be allocated between parent company and NCA in the proportionate issue, provided it is a full goodwill. Provided the resultant goodwill is a full goodwill. Okay. If it is a partial goodwill, then same H Limited P&L account debit to impairment loss. Okay. So if you wanted to get more attention from the valuationer, you can write this point. So assumed in note point, so write it as like if you want get more impression from him, put it as 1 star or you can write it as a note 1. Only one thing. Assumed the given goodwill is a partial goodwill. Hence, transferred entire impairment loss to P&L. Entire goodwill impairment loss to P&L. So if it is a full goodwill, the entire goodwill impairment loss should be allocated between P&L account and NCA. Okay. Now, so far, next calculation is you no need to provide in the your answer. So for the purpose of conceptual clarity, now tell me the carrying amounts after this revaluation effect. Carrying amounts of assets after impairment. Now tell me how many assets are there? Asset A, B, C, D, E, intangible asset. Okay, next goodwill. Just asked how many assets are there. Okay. Carrying amount before impairment. Now tell me what is the carrying amount before impairment? Tell me the amounts please. 280, 460, 220, 180. Go on. 100, 90 lakhs, goodwill 50 lakhs. Now I should deduct impairment loss. What is the impairment loss for asset A? Nothing. Asset B? 60 lakhs. Asset C? D? 10 lakhs. Asset E? 5 point. Then intangible assets? 4.74 lakhs. Goodwill? Goodwill. What is the impairment loss? 50 lakhs only, right? Why you are saying with all the time, with uncertainty? You can say it okay with loud voice. 50 lakhs only. Here what is the journal entry I have provided? Impairment loss account debit to goodwill. The goodwill should be reduced by 50 lakhs. I am asking what is the goodwill? 50. What was that? Then carrying amount after impairment. $280 lakhs, 400 lakhs, 220 lakhs, then 170 lakhs. Tell me 100 minus, sorry, 97? Okay. Next. 85.26. Okay. 0. Okay. So you no need to provide in your answer, just for the conceptual clarity, just wrote it down. So after the impairment loss, the carrying after impairment amount. If they are asked in any other problems, you can provide like this. Okay. Okay. We will complete the remaining problems in the next session.